Imagine this. You start with just $25 a week. That's less than most people spend on coffee or takeout. Fast forward a few years, and you're sitting on a portfolio worth over $500,000, paying you $5,000 a month, every month, on autopilot. Sounds impossible, right? It's not. In this video, I'm going to show you how a simple strategy called DRIP, Dividend Reinvestment Plan, can turn that $25 into financial freedom. So grab a notebook, because this is your chance to create wealth like the pros, and I'm giving away all the secrets. By the end of this video, you'll know exactly how to start with just $25, 25 euros or 25 pounds a week and build a portfolio that grows itself. No fancy tools, no expensive advisors, just smart planning. Plus, I'll share my top stock picks for this strategy, so you can start today. Let's get to it. Alright, so let's talk about the backbone of this strategy, DRIP, or Dividend Reinvestment Plan. Think of it like planting a money tree. Here's how it works. When you own a stock that pays dividends, instead of taking that cash and spending it, you reinvest it back into the stock. This buys you more shares, which then generate even more dividends. It's like a snowball rolling down a hill, getting bigger and bigger every time. And the magic behind this? Compound interest. It's the same principle that grows small investments into massive portfolios. Albert Einstein himself called compound interest the eighth wonder of the world, and today, I'll show you how to make it work for you. Let me break this down with a quick example. Imagine you own 100 shares of a stock priced at $20 per share, and that stock pays a $1 dividend per share every year. By the end of year 1, you've earned $100 in dividends. But instead of cashing out, you reinvest and buy 5 more shares. Now, you've got 105 shares. Next year, those 105 shares pay you $105 in dividends, which buys you 5 more shares. This cycle continues, and with each revolution, your portfolio grows faster and faster. The snowball effect is real. Over time, this growth becomes exponential, and that's where the big wins happen. Now, let's take it a step further. Let's say you start with just $25 a week. That's $100 a month or $1,200 a year. Doesn't sound like much, right? But here's the thing. Consistency is your best friend. When you combine your weekly contributions with the DRIP strategy, your portfolio compounds at a faster rate. Here's what happens over time. At the end of 10 years, your $25 a week grows to $27,825. After 20 years? $145,500. And in 30 years, you're looking at $823,000. Better yet, that portfolio will pay you over $63,000 in annual dividends, which works out to $5,280 every month. That's a full-time income. The best part? All of this is on autopilot. You set it up, and your dividends reinvest themselves. No stress, no constant management. But wait, there's a way to make this strategy even better. Here's how you can supercharge your DRIP strategy. 1. Add more money regularly. 2. Increasing your weekly contributions, even slightly, can accelerate your growth. 3. For example, bumping it from $25 to $50 per week doubles your portfolio's pace. Pick the right stocks. Not all dividend stocks are created equal. You want to focus on quality, stocks that pay consistent dividends and have a history of growing them. Leverage dollar cost averaging. This means buying shares at regular intervals, regardless of price. It reduces the risk of buying at market highs and takes advantage of dips over time. Stay consistent. The key to this strategy is patience. The longer you stay invested, the bigger your snowball gets. Remember, wealth building is a marathon, not a sprint. By following these steps, you're setting yourself up for massive success. Now, let's talk about the stocks that make this strategy work. When building a DRIP portfolio, you want a mix of blue-chip dividend stocks. These are stable, reliable companies like Coca-Cola, Johnson & Johnson, and Procter & Gamble. They're great for steady growth. Dividend aristocrats. Companies that have increased their dividends for 25 plus consecutive years, like AT&T, Walmart, and ExxonMobil. These are your long-term anchors. High-yield dividend stocks. Stocks with higher than average dividend payouts, such as Realty Income Corporation and Verizon. These are great for maximizing income. Growth-oriented dividend stocks. Companies like Microsoft, Apple, and Visa, which combine capital appreciation with dividend growth. For example, my personal picks include NextEra Energy, Starbucks, Abbott Labs, Home Depot, and an S&P 500 Dividend Aristocrats ETF. This mix covers stability, growth, and high yields, giving you the best chance for success. So, can $25 a week really transform your financial future? Absolutely. By combining consistency, the power of drip, and smart stock selection, you're setting yourself up for exponential growth. This isn't just about making money, it's about creating freedom, security, and the life you've always dreamed of. Remember, the best time to start was yesterday. The next best time is today. So grab that $25, set up your drip, and start building your financial future now. Did this video inspire you to start your investment journey? Let me know in the comments below, and share your favorite dividend stocks. Don't forget to hit that like button, subscribe, and turn on notifications so you never miss a tip on building wealth.